Well, thank you, Geetika, and thank you so much, gentlemen, for your presence here. An in-person event after a fairly long amount of time. And thank you, Vivek, for joining us virtually. Would have loved to have you here. But thanks regardless for making this happen. You're joining us from New Delhi, of course. And congratulations also, for being selected as part of the PLI scheme for auto components. The list has been out today. As Geetika was mentioning, the theme of this discussion is whether India can be the factory of the world. Manufacturing, as we know, is a very significant chunk of the country's GDP. It's a big employment generator also. But for some reason, we haven't been able to capitalize, our manufacturing capabilities and sort of leapfrogged in ways that we have in some other sectors like the services sector. Without wasting much more time, I'd like to, go across to the panel and ask them, what will have to give way so that we can really seize this opportunity that has become especially visible now in the light of, several supply chain headwinds that we have witnessed over the last 2 or 3 years, in fact. First, because of COVID, now there are, many geopolitical tensions also that we are witnessing. So it becomes imperative that we address this question sooner than later. Vivek, if I can start with you, can India really become the factory of the world? And since you're passionate about calling it the smart factory of the world, so let me phrase it like that. What can we do so that we do become, a global smart manufacturing hub?
Apologies for appearing as a giant head floating in midair. But that is the point of technology, and since we are talking about manufacturing, at least one of us should be in a factory, right? So I'm in a factory physically. So why, the short answer to your question, yes, India can be a factory to the world. I believe we already are. In the sector that at least I am in. In automotive, we are the largest producers of two-wheelers in the world, the largest producers of tractors in the world, the second largest producers of buses, the fourth largest producers of passenger cars, the sixth largest producers of trucks. So at least in the limited space that I work in, we are one of the world leaders. Can we extend that to other industries and what would be needed? I think it's a very important question for at least our generation to answer. I think the earlier generation, if you had access to capital and the ability to organize labor, you could be an industrialist, you could be in manufacturing. I think capital is not a constraint anymore, and neither is the ability to organize labor. I think we've moved to an era where technology and how you can leverage that in 3 ways. In application, so the convergence of hardware and software, how many grams of code can you run, how many grams or lines of code per gram of steel for us? As a platform, what Vishal is doing with ZWorks, can you extend that to actually make productivity higher? And as an enabler in Internet of Things and automation, can you be such that your capital equipment is world-class? Your processes are world-class and you can compete with the world. I think these 3 things, if we do, and we can start owning or at least controlling the primary technology with which we produce our goods, we will get there. And I think there is a renaissance happening in manufacturing as we speak. In the last 3-4 years, I have seen more excitement in manufacturing than ever before. There is a lot of high quality talent that's coming in manufacturing. A lot of high quality startup. You look at the EV two-wheeler space, you look at robotics, you look at defense, and even the capital markets have appreciated that. So yes, I'm a very big optimist and I'm a believer in Indian manufacturing. And I think this decade will belong to Indian manufacturing.
Padmanabh, if I can come to you now. Traditionally, the manufacturing sector hasn't seen a lot of private capital flows. Is that changing now? And how does your investment pipeline, reflect that? You are a sovereign wealth fund. You're mandated with, investing in also areas that can aid the country's growth. So, your opening thoughts, and if you could respond to that.
So I think Vivek is working. Vivek summed it up well when he said there's a renaissance in marketing in manufacturing in the last 3-4 years, and ultimately, as investors, our investable universe will depend on really how manufacturing businesses are doing. Clearly, I think this is India's opportunity. Unlike in outsourced services, we've never been a manufacturing hub of the world, maybe for the reasons that we didn't have world-class manufacturing, design-led manufacturing at scale, except in a couple of sectors. And I think one thing that COVID made all of us realize is that manufacturing as a sector is strategically as important as infrastructure, because when global supply chains break down, whether it's something as basic as vaccinations or it is semiconductors, battery storage, areas like that, unless you have your manufacturing facilities, particularly for a market as large as India, you will be hamstrung. So we always had a favorable demographic that was well spoken about. I think what we have now is much stronger entrepreneurs and management teams, which is critical, because as investors, we are very focused on the quality, particularly when we are doing growth capital investing as we do, on the quality of the entrepreneurs and management teams that we are backing, the governance there, the focus on innovation, because we ultimately, as private equity investors, we are investing for several years, right? We want to invest in businesses which are sort of future-led, future-proof. We don't want to invest in businesses which will be mature in 5 years, but will continue to be high growth. So the sort of future-ready manufacturing businesses are extremely important, which is why as NIF, as a sovereign-linked fund, our focus really is on new-age manufacturing businesses, and whether it is 5G equipment, EVs, battery storage, electronics, these are particularly sectors of importance, where the inflection point seems to be coming in many of these segments, because, as we said, the demographic was always there. Now we have high-quality entrepreneurs and management teams. We have competitive taxes. People speak a lot about PLI, but what is forgotten about is the manufacturing taxes for new manufacturing at 15% plus surcharge is really competitive. So that was lacking earlier. That's now available. We have much more efficient supply chain developing. I think ZWorks was supposed to be there, but it's not there on the panel. So there is stuff happening on the supply chain side. And finally, research and design and development is important in terms of innovative rather than commoditized manufacturing. So all these provide for the right ingredients for us to look at providing growth capital. And NIF as a sovereign-linked fund, as you correctly said, we started off with the focus on infrastructure and now growth capital or private equity in sectors, including, so 4 or 5 sectors we identified as manufacturing, financial services, social infra, digital platforms. These are areas of interest, and since we are targeting, we already raised over $1 billion, targeting over $2 billion fund. We're really looking at sizable opportunities of scale that we can back, and these will have to be businesses which can be competitive, not just in India, but potentially globally as well. So yes, we're quite hopeful that in the next few years there would be attractive manufacturing opportunities. The other thing that as NIF we do look at is also partnering with potentially with MNCs as they look to set up base in India to become their local partners in some of these segments.
So you're correct to point out that manufacturing perhaps was not, a destination where even a lot of new enterprises would come up for the same reason that, even gathering investment there was a bit, perceived to be a challenge, but you're saying that we might be approaching an inflection point as far as that is concerned. Pankaj, you back businesses, in the pharma chemical space also, which is one of, one of the few sectors which have, sort of started to, reach the, sort of cost competitiveness that is required to, also start to be able to export successfully. Your opening thoughts about the opportunity that India can provide as a global manufacturing hub.
Yeah, so firstly, I would agree with both the panelists who spoke ahead of me that probably the next decade is for manufacturing. I think as Advent over the last 5-6 years, we've invested in over 8+ manufacturing-led businesses. And as we speak, we don't run, our teams run, but we run 35+ manufacturing facilities across the country. So we've, of course, taken deep bets on manufacturing-led businesses. And we are seeing that also change in our pipeline of investments. Particularly in pharma, we've made 4 investments over the last 3 years. Historically, the sector had issues of depth, I would say, right? From an investability perspective, we had an issue of depth and scale. But that's changing in parts across a few select sectors. And that's being driven by 2 factors, I would say. On the demand side, it's both import substitution and export-led. Export-led, we've heard the story around supply chain, China plus one, right? So I'm not going to repeat that. But that theme is playing out in some sectors, in some sooner than the others, but we're seeing sectors make that progression. I think on the supply side, what you're seeing actually is people getting cost competitive and moving up the ladder on technology. And I often say technology can either be used to create something innovative or become more cost competitive, right? And both plays are good place for you to do. And I think we're seeing that happen. As Vivek said, it's played out in auto comms. It's played out in formulations on the pharma side. We are seeing that play out on APIs and intermediates. We are behind on the KSM side, and we are going to see that play out even on the chemical side, and hopefully in a few other sectors. So we continue to be bullish on manufacturing.
Right. If I can pass that same question on to Prakash, you also have taken serious bets in the manufacturing space. How do you see the opportunity evolve?
Okay, so we are a homegrown fund, and we have been investing in India since 2006, right? And as an investment thesis, right from the word go, we have a very focused approach on investing opportunities. What we have really seen in the last 15 years that opportunity, the availability, sheer availability of the opportunity was quite low, way back in 2006, 7, 8, 9, 10, and where we, of course, could find some and, back those companies. But of late, what we are seeing, and especially, I'm realizing it in the last 2-3 years, especially post-COVID, the number of opportunities which we are able to see and the quality of those opportunities, whether it is quality of business, whether it is quality of management, the entrepreneur himself, very confident about the opportunity and all that, we are seeing a very, clear change in terms of those opportunities which are presented to us, and very difficult to say. Can we say no to those? I will have to really think through, right? So I think this is one good change, one happy change, from an investor's point of view, that there are number of opportunities, right? And secondly, where I really want to, stress on one point is that, see, in around India, this entire skill-based manufacturing, India has a very large pool of, skill set which is available, right? Backed by, your English-speaking population and all that kind of stuff, right? And we are clearly seeing in some of the businesses that why someone would come to India and not go to, let's say, China, of course, is China plus one strategy for everyone, but not go to any other geography, right? So I think there is a very strong combination of skill set, the opportunity itself. What one will have to really see that, are you able to capitalize on that? And we are very hopeful that, some of these things are going to pan out in the next 5 to 10 years.
Right, so the next decade is looking encouraging for manufacturing.
Yeah.
Yogesh, what would you like to add? Same question, really. Your thoughts on the opportunity we have to become a high-quality manufacturing hub, globally competitive manufacturing hub.
So let me stick to my day job, which is to look at things as a lawyer. I think from 2015 onwards, what we saw was that manufacturing was moved back into the limelight. And I think the government was more aware and did many more things to bring the focus on manufacturing. From simple things like ease of doing business in India, from making it easier to apply for licenses online, though I'm not saying that everything is hunky-dory, but I think things have significantly improved. And if you stack up all those little things, it has contributed very significantly. I think the other thing that we are seeing is that between the states, there is a lot of good, healthy competition. And truly manufacturing is being seen as a tool for social change as well. So which is why the state also comes forward and nominates areas and says, here is a developed piece of land and I'm willing to provide you this incentive and other things. Far better and far more evidently than what we used to see in the earlier years. I think having said all of that, as a what all would I like to see? I think my ask would be very simple. Very primary things like focus on rule of law. We need to be consistent. Whatever good work is being done can be taken away by one single regressive, retrospective step, even today. And the entire world is watching us. We need to be even more careful. Number two, things like insolvency and bankruptcy code. I think we need to work very strong, very carefully to implement it. We need to work on the amount of staffing in our NCLTs and our higher judiciary and work on how we can solve larger issues regarding enforcement related issues. And other than rule of law, I would say focus on R&D, because I think, like Vivek pointed out to you, that you cannot just be a factory of the world anymore. You have to be a smart factory. So R&D, innovation are very important. There are many sectors where still there is no availability of capital. And we can talk about later, but things like defense, there has been very little capital that has been available for those sectors. So that. And I think the last and most important thing that we as lawyers tend to get asked is our IPR enforcement laws and regulations. We've seen very positive improvements and a recent move by the Delhi High Court to set up a separate High Court bench to, on the original side, to be able to look into IPR enforcement measures. I think those kind of things are extremely important to make sure that this apple cart keeps moving along.
Right. Thanks for that perspective, Yogesh. I want to talk about the PLI schemes now, and the government has put significant weight behind those, tens of thousands of crores, spanning 13 sectors. We're likely to see design-led incentive schemes also in the future. So I want to get the panel's view on how successful they have been and how successful they can be in encouraging, class-leading global manufacturing in India. Vivek, if I can start with you, Sona Comstar, of course, is a supplier to some, really established global OEMs, and in sectors such as electric, vehicles, which is a significant, generational opportunity, if I may. How do you see the, schemes like that, pan out, when it comes? I mean, there's differing views, right? There's one view which says that it has enhanced capacity, and another view is that it may be looked as a sort of a viability gap funding, which is what you were mentioning, Pankaj. The other way to look at this is also that is it enough to just create capacities, or do we also need a technological component linked to that? So we're also moving up the technological value chain in manufacturing. So your thoughts on that, Vivek?
How much is the PLI as a percentage of just auto output? It won't be that much. Yes, what it does is it enforces a positive bias towards technology-led capacity enhancement, which is what is the right way to approach this problem. Not just say generically put up capacity and we will reward you. So yeah, I'm a believer in manufacturing. It takes times. Once you sow the seeds, the saplings come out in 3-4 years, and to become trees, they take 7-8 years. It's slower than other sectors, but the result is far more long lasting. Unlike others where the technology obsolescence cycle is much smaller, here because let's say a platform, I know more about our industry, so I'm speaking about that. Any powertrain once developed has to last a minimum of 10 years. And it's a billions and billions of dollars in investment. So once you do enforce that change, the benefits of it are much longer. So yeah, I think this is the right approach, to be honest, and not just blind PLI, a technology-led PLI.
you now. Do you agree that, in the creation of an ecosystem around manufacturing, let's speak about pharma particularly, we have started to do well in certain areas. What's the road ahead, beyond, APIs and generics? Let's look at the creation of pharma parks, plug-and-play facilities which were supposed to give confidence to investors, make setting up, manufacturing in India easier. Do those elements linked to PLI schemes also help?
So, overall, I would say it's a step in the right direction, right? Either PLI or pharma parks. All these steps, as Vivek said, rightly said, right, they reinforce the commitment and create this positive virtuous cycle. And so the first step is important. The second question you're asking is it enough or not? And do we need to do more around it, right? I think that is always debatable, whether there are more steps you could take. So for example, can you do more on the biotech side? Can you do more which is linked to R&D and therefore true innovation in pharma versus production? So you can always debate and say there's more to be done, and you can always also say beyond
What side
PLI.
of the debate are you on right now?
No, so I would say it's a step in the right direction, and of course you need to do more to create the overall ecosystem to enable manufacturing.
What could those things be?
So for example, I mean, one of the things I said is, right, really focusing on R&D and innovation. That could be one of the things. B, if you're trying to bring manufacturing, to take an example of pharma, if you're trying to bring manufacturing of certain molecules within the country, are you creating the full ecosystem to enable cost competitiveness in the country, either from a labor law perspective or power supply perspective, right? So you have to look at it holistically, but as Vivek mentioned, is the right step, the first step, yeah.
Right. Prakash, do you also want to take that question and add your thoughts on, how the PLI schemes have fared so far? By design, what they incentivize, is it just production? Is that enough? And incrementally, how do we do better technologically also and continue moving up, the value add ladder?
Right. So, when this entire, PLI scheme was launched, I think the initial reaction was very good, right? And I think it all started from PLI on mobile manufacturing, which itself is almost 50,000 crores, right? So from an overall manufacturing industry perspective, this was like, something which was out of the blue. No one would have thought of something like coming out of from Government of India, right? And incrementally, it kept on expanding to other industries, right? So I think, even at the topmost level, there would have been a thought process that, it starts from somewhere, and then it reaches where it is needed most, right? Whether it is around something which is not there, a very high skilled, high investment, something like semiconductors and all that, right? Where, there is no ecosystem in India, and you have to, along with an entrepreneurial capital, there is another pool of capital which is available to tap and make a viable business proposition, right? I think some of these things, and then this entire hydrogen fuel cell and all that kind of stuff. So my sense is that, this is like a journey which probably will go for another 2, 3, 4 years, where we really see that how things are going to pan out. And I'm sure, even at the topmost level, these guys would be watching that, how people are able to absorb this, use it, create capacity, and and then it becomes more like a cycle.
Right. Yogesh, how do you think about the PLI scheme? We were discussing earlier that the way you see it, as the government has also created these schemes, particularly targeting sectors where perhaps there wasn't a lot of fundamental push or that much of a market, or the industry perhaps wasn't, very enthusiastic about producing more. To that specific point, are the schemes in their current form successful? And what can be done to enhance, that proposition further?
So see, I think no one knows whether the schemes are successful because proof of the pudding hasn't come out yet. We'll all know in the years to come. I think it's a great description to call it a technology-linked scheme, because if you look at the preamble of the scheme itself, it says that the idea is to incentivize manufacturing of those products where the industry may not want to manufacture or where there may not be any market. But we as a country and our government has chosen that those products need to be, we need to figure out a way to manufacture those. So it's a very nuanced way of looking at that. We cannot call it a subsidy, not just to save the argument for India when we have to defend it in the WTO, but even otherwise, it is not a subsidy, and that is the wrong way to look at it if anybody looks at it, right? It is meant effectively to encourage manufacturing of certain products which are in an identified list, because it's not necessary that the industry would be focusing on those products.
You know, since you raised the specific point of subsidies, I want to bring Vivek in again. You know, the auto sector enjoyed quite a few of those, whether it was the MEIS scheme. How do you think the PLI scheme links to those? You know, some of those benefits or let's say subsidies, you know, were withdrawn, you know, with the explanation that we don't need to overtly protect our industry, right? So there's only so much hand holding and you can only do it for so long. So how do you respond to that? Do we still need that subsidization, you know, that sort of thinking process in the regime?
So look, 75% of our revenue comes from international markets. So when MEIS got withdrawn and replaced with RODTEP, it did hurt us. When money goes away, you do feel the pinch. But just on an intellectual basis, I think that was the right thing. Why should you just export should be incentivized irrespective of what they are? Why? Then why won't you just become a commodity guy and you maximize by trading and add no value? Manufacturing's core purpose as an industry is to add as much value as it possibly can while reducing the cost of addition of that value. That is it. Regardless of what you make, that is what you do. You take raw materials, you take capital and you take labor, you do some processes, which is what we call technology, and that converts it into a good that is more desirable than what you started out with, and hence you can extract some money. That's what manufacturing is. Why should you get incentivized for making anything? You should get incentivized for making things that as a country and as an ecosystem and the global sector, mobility, needs those things. So I think it is the right direction as a policy. If we want to make India a smart factory of the world, that is the direction we should be pursuing, and not blindly saying production linked or export linked incentives. That, as Yogesh said, was protectionist, to be honest. And I think that 90s to 2000 era of industrialization, which was about let's protect this fledgling industry, let it become something, and then we will let them play with the big boys. And I think it's time. I think we need to do it on our own merit. We need to compete. We do that. And a lot of people in our industry, and some of them actually even in other manufacturing industries, have started competing with the people who were considered big. I mean, electrification, autonomy, and connected have reset the mobility industry, right? So the advantages of head start that the Western world and the Western companies had for 30, 40 years, they're gone suddenly. We are as good as them. And if you take engineering talent, pound for pound, I mean, Indians can go against anybody in the world for engineering talent. I mean, you go to any of these automotive leaders, you look at the engineering talent there, you go to the engineering department, most likely you'll find people who look more like me than, than a gentleman, let's say, called Rainer or Matthias. They will look more like us or Asian. We have the talent. I think our people's skills, especially in engineering, is the greatest asset we have as a country. If we can monetize that, if investors also, and I think Paddy said that you look for management teams, you look for entrepreneurs who have that vision, that drive to harness and own technology. You know, that JV age is also passing. We need to own and develop our own technology. R&D, I think Yogesh said that R&D needs to be encouraged. That is one step that I think we've still missed out. I don't know how to do it. I'm not a policy maker, but somebody needs to encourage that. We spent like 5-6% of our revenue in R&D, but not because we get any incentive for it, because that is literally the ethos of our business. 1/6 of our employee force is R&D engineers. That's our USP. But there's no incentive for it, except for, of course, success. But capital markets have been fairly good at recognizing that differentiation by the way. So I think more of that, but apart from that, I don't think I can complain. In the last 4 or 5 years, from a policy perspective, we've got more than what we expected, to be honest. I never thought governments will do things for us.
Does the panel concur with that view? Okay, so I think everyone is in agreement, and with that, I'd like to move on now to, an export focus also, right? The PLI scheme is by and large geared towards domestic production, but we also need to become a factory of the world, is of course make products that are globally competitive, and our Asian pairs are able to, do that fairly successfully, whether it's the cost of logistics, labor, infrastructure, ecosystems. We have fallen behind in some ways. How can we sort of, recoup that opportunity, if I may use that word, and, what opportunities then do we have, and what will have to give way so that we can actually, China plus one, has been the discussion ever since COVID, that we saw large-scale supply disruptions. What can really be done to now seize that opportunity? For new enterprises, it has been a challenge of scale. Investors have sort of, Padmanabh, you are also, you have to generate returns on the investments that you make. So that takes, there's a gestation period to those things. How can you facilitate, the industry to generate scale? Whether it's backing it by capital, strategic investments, skill set development, what will have to give way essentially? Prakash, if you would like to take that first.
Okay. So, when we look back, that, what you really, what is really missing here, right? And when we go out and talk to, some of the companies where we have invested in, or even some of those customers who are sitting in the Western world, one thing which is very common is around supply chain, right? And, this is my personal experience. And when I was talking to a guy, sitting in US, he says, there is a lot more India can do, right? But how do we get that confidence that, you will be able to meet your supply chain? So my sense is that, supply chain vis-a-vis China, their comparison is only China, right? So from their perspective is like, their working capital cycle is going to be elongated, what will get stuck in India and all that kind of stuff. So my sense is that supply chain is one big, concern somewhere, which is there, from those global guys' perspective. And second thing is, which is all around, that around this, labor laws, labor practices and all that, right? And this is something, which is, in manufacturing, you employ a lot of people, right? And the practices which are there, these are different all across the country, right? You would have something in the north, something in the west, something in the south, right? I think there is a lot more thought process which really needs to go into, government tried doing something around labor code and all that, which is, of course, is a little bit in the back burner. But I think some of these elements, supply chain, labor and all that, and there could be more, but these are two top of the kind.
Sure, but Padmanabh has something to add.
Yeah, no, I think on scale, obviously, as you said, and since we have an arm which focuses on infrastructure, including investment in logistics, ports, etc. We have good visibility, so there are improvements happening in India. And finally, your factors of production have to become competitive, as you said, to get the return on capital. But I just wanted to add that it's, of course, scale is important, and the vision of the management and their execution ability to ramp up obviously will provide for that, and us as capital providers providing capital at scale. But it's, to me, for that export story to play out well, it's not just about scale, it's about quality and brand. I think that's where we must score, and our companies must score, if we can have a broad perception of high quality. It's not necessarily it'd be disruptive in terms of technology. A lot of our companies can be fast followers in technology rather than the innovator. But doing it with quality at scale is what is important. To me, that combination is what will help us, get recognition as an export market. And finally, it has to leverage off the scale that domestic markets provide. Unlike in IT services where it was not based on the domestic market, I think in most aspects of manufacturing, where India will thrive is where we also already have reasonably sized domestic markets.
Right. Pankaj, do you agree with that?
Yes, I agree. I mean, how India can benefit from supply chain disruption is like a favorite topic of mine. We made 3 investments in the last 2 years on the back of that thesis. And as I've heard the panelists say, right, to take advantage of that, you need scale, you need to supply at quality, and you need to supply at the right cost. And we often ask global buyers, we often hear global buyers ask, am I truly de-risking completely by buying from India or not? Right. And do I have enough scale players from whom I can buy? The problem probably isn't there in autocoms, but it's definitely there in other sectors, right, where people question, are there enough scale players for you to do it? And I think private equity can play a role in accelerating that journey of creating scale. And there, of course, we can look at regulations even in a more liberalized way, right? Can private equity really be seen like strategics, or you look at that capital in a different form and shape because they're essentially not strategics, right? And can help create scale in the sector. So some of these things can help us accelerate the journey and take benefit of this entire supply chain disruption.
So that distinction helps. Yogesh, I mean, we're almost running out of time on this discussion, but before we, wrap up this conversation, I want to talk about defense. That's a space, you work in a lot as well. We haven't really been able to, we have a significant part of our budgetary spend is also towards defense, but we don't do a lot of cutting edge manufacturing there. What's the opportunity there?
So see, I think 13% of our budget goes towards defense. And if you take out pensions and all, and I'm struggling to convert this into US dollars, but the defense capital outlay budget for India is 1.52 lakh crore per year. Right? Of that, 68% has been allocated towards the domestic manufacturing thing. Now, defense is a very important tool in this because we need to have self-dependence. There's an increasing focus on indigenous capability. And historically, all our sophisticated arms and ammunition have come from outside except for our missiles and a few patches here and there, which DRDO and a few handful of Indian companies have done well. So we increasingly need to get investment. We are the ones who are going to be spending. So the monopsony over there works beautifully for us if we use it. So and just conscious of time, so I'll quickly wrap up here. So given that, if the way the government is looking to spend the money, if more companies are incentivized to set up bases in India and they build capabilities over here, because the way the procurement policy is, there is a prioritization that is given to a supplier based on the amount of indigenous content they have. And if you don't have indigenous content, then to that extent, you need to have an offset obligation of investing in India, right? Like you would have heard of the Rafale program and the offset partners and all that. So those being the numbers and the kind of opportunity and that being a very core base to manufacturing and with the offset incentives likely to go into the manufacturing ecosystem, I see that as a big, I call defense manufacturing as a dark horse for putting Make in India back on track.
Right. Thank you for that, Yogesh, and thank you, gentlemen, once again for being on the panel. Thanks, Vivek, for joining in virtually. I think this discussion should give us a lot of confidence in India's manufacturing story. Private equity players have attested to that, and I think we have it right from the horse's mouth. That there is a lot of optimism in this space, and traditionally, what hasn't happened in terms of private capital flows to manufacturing should now start to improve. So thank you once again, gentlemen, for joining us at Mint today.